Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Let's tackle a big question a lot of people have. Do you have to pay taxes on Apple Pay? The short answer is almost always no, but the details are what really matter. Think of Apple Pay like your physical credit card or a $20 bill. It's simply a tool, a method you use to move money from one place to another. You don't get taxed for swiping a credit card, and you don't get taxed for using Apple Pay. The tax you pay is based on the reason for the transaction, not the tool you used to make it. Let's break this down into two simple categories. First, there's personal use. When you use Apple Pay to buy a coffee, you're paying sales tax on the coffee, but you're not paying an extra Apple Pay tax. When you use Apple Cash to send your friend $20 for your half of the pizza, that is not a taxable event. It's a reimbursement. If your grandma sends you $50 for your birthday via Apple Cash, that's a gift. You, the receiver, do not pay taxes on gifts. The key here is that these are personal, non-commercial transactions. Now for the second category, which is where all the confusion comes from, business use. If you are a freelancer, a small business owner, or you sell things online and a customer pays you using Apple Pay, that money is income. And yes, you absolutely have to pay taxes on that income. But again, the tax isn't because you used Apple Pay. It's because you earned money from a business activity. You would have to pay taxes on that income whether the customer paid you with Apple Pay, a check, cash, or a different payment app. This is where you might hear about a tax form called the 1099-K. This form is sent by payment processors to report payments for goods and services. There was a lot of buzz about a new IRS rule that would trigger this form for anyone receiving over $600 for goods and services. However, the IRS has delayed the implementation of that low threshold. For the 2023 tax year, the threshold remains much higher, at over $20,000 and more than 200 transactions. It's crucial to understand that this form is only for business transactions, not for getting gift money from your aunt. And even if you don't receive a 1099-K form, you are still legally required to report all of your business income to the IRS. So, the bottom line is simple: Apple Pay itself does not create a new tax. If you're using it for personal reasons like shopping, splitting bills with friends, or receiving gifts, you have nothing to worry about. If you're using it to get paid for your work or for selling items, that income is taxable, just as it always has been, no matter how you get paid. Thanks so much for watching. If this video helped clear things up for you, please hit that like button and consider subscribing to the channel for more simple answers to your biggest money questions. We'll see you in the next one.